I think now it's the time to be adding and accumulating to your position, as I think we're going to enter or resume this phase of a bull market. And so I really like gold here. I like silver as well. I like some base metals. I like commodities in general, but I think precious metals are the ones that look even more interesting from a value and macro perspective.
Well, hi to viewers catching up on this virtual fireside chat, which forms part of our mining investment insights from across the Americas. I'm very pleased to be in conversation with Tavi Costa, who is partner and portfolio manager at Crescat Capital. We're going to be talking about gold market and the investment rationale for gold and gold mining equities. So Tavi, thanks very much for taking time to catch up with me today.
Well, thanks for having me, Adam. Looking forward to this.
Yeah, excellent. So Crescat's a large asset manager with several funds, and I want to start perhaps by focusing on the macro picture, get your expert opinion there before we go a little bit deeper into the precious metals fund that you also run as well. So kicking things off then, where do you feel that we are in the gold market? Is this a constructive point in the bull market given the global macro picture?
I believe so. I think the macro imbalances is what creates the demand for gold, but really the optionality for gold is what attracts me. It's an asset that can perform well in deflationary environments when you have money velocity falling in places like Japan and you see gold prices rise in Japanese yen terms. It's a great example of a deflationary environment where gold still performed very well for those who think gold only performs well during inflation. But I truly believe we're entering an inflationary environment in the US, which I think will be very positive for gold, as a lot of folks will be looking for forms of protection, which I think will be tangible assets and natural resources as a whole, which fall into that category, especially those industries. And what we're finding here is that the demand side of the story is just as compelling as the supply side. We haven't seen any new gold discoveries in the last 3 years. The geological challenges of finding gold is certainly one of the big issues in this. And when you look at the explorers and especially the producers, their exploration budget has been falling for a long time and diverging from gold prices. And so we haven't seen an M&A cycle. So all those are signs of being at the earlier innings of a gold cycle. And so we think we think that we're in a secular bull market that started really in 2018. It's been there. We saw 75% increase in prices from August 2018 all the way to August of 2020. Now we've been in a consolidation mode. I mean, a lot of people panicking, looking at the price, but it's absolutely normal. And so I think now it's the time to be adding and accumulating to your position, as I think we're going to enter or resume this phase of a bull market. And so I really like gold here. I like silver as well. I like some base metals. I like commodities in general, but I think precious metals are the ones that look even more interesting from a value and macro perspective.
Excellent. Thanks for that rundown. Just pick on a couple of things that you mentioned there. You mentioned, we're in a constructive period and the price is sort of where it should be. But how do you account for the price coming down this year versus last year? Is that simply a correction that we've seen?
I think there's a lot of things that could potentially be hurting gold, even though real rates have somewhat diverged from gold initially, which started creating this issue where nominal rates begin to rise faster than inflation expectation. This is at the very beginning of the sell-off. Then we saw base metals and other commodities performing better than gold, especially after elections, after the vaccine news that came out a week after elections. And since then, we've been struggling. We saw that silver squeeze move where silver almost began to try to take new highs for the cycle, and it didn't. It faded. And so I think it has a lot to do with what the Federal Reserve is likely to do here. I think what the gold and precious metals market in general is signaling is that the Federal Reserve is actually going to taper. And I see a lot of people on the other camp of that. And when you look at the euro dollar curve, it basically tells you exactly that. The steepness of that curve is telling you that the Federal Reserve is going to taper. They're going to proceed with that. Inflation is a big problem for policymakers. Is really what it restricts them from using policies actively in order to prop up markets. And so I think that they're seeing this. They're basically not making it sound like this is a big deal, but it's a huge deal what's happening with inflation from a policy making perspective. And so I think they will taper today, and will continue to try to do that as much as they can. The real question is, can they sustainably do this over time? And I think tapering would only lead to actually more stimulus later on. And that's why I think gold is going to do very well as when the reversal of those policies. But remember, gold acts in front of those moves. It doesn't act when the news comes out. And so I think that most of that has been priced in the gold price right now, all the tapering and the removal of liquidity in the markets. So I think that's what's been really impacting gold in the last few months or so. So those are some of my ways of looking at what's happening. The other part is to do with equity markets doing so well as well. It steals a lot of the flows of crypto. I mean, if you're not mentioning crypto here, it's I think it's an important asset class that is.
Yes, I was going to mention.
Yeah, it's certainly taking away a lot of the capital inflows that would have already come into the space. And there's a ton of skepticism in this industry of mining, with the ESG developments and so forth. This is all going to create incredible imbalances, in my view, which are going to be very positive for natural resources in general. So, I think those are probably the biggest reasons.
Yep. Excellent. Well, covered a lot of stuff there. Let's switch on to the mining side of it then. Global equities, seem to continue to outperform. There's this sense of perhaps that falling off. How do you think that what's going on in China right now? Granted, it's not part of the global capital markets, but the systemic issues that are going on in China and Chinese and Evergrande fiasco, do you think that could have a systemic impact on the performance of global equities, and that in turn would also be positive for gold?
Yeah, I think it bothers me to see all the new experts of Evergrande looking at the situation. We've done so much work on this all the way back to 2014. In fact, we have been had short positions in the Chinese yuan for a real long time. We've been right sometimes and wrong sometimes. But what we've seen, I've calculated even the accumulation of losses in free cash flow of those property developers for so many years. And we've seen a long time, the accumulation of that relative to the losses and the capital bleeding of those businesses, knowing that the value of real estate in China, along with the ghost cities and so forth. And so this is no news. It's definitely a symptom of the $52 trillion of assets created in the banking system of China. I think China is a real credit bubble risk for the global economy. It's been the global engine for the world for a real long time. And I can't hide from this, because it's particularly important how commodity prices have begun to rise recently, and inflation has started to creep up, and it happens to be at the same time that China started to have issues. It's quite interesting, and I've always thought that this was a problem. Back in 2018, for instance, something that caught my attention was pork prices, because I thought that would create an inflationary spiral. It had the potential of doing that, and so I've been always concerned about an economy that is largely indebted to the levels that we see in China. And that's not to say that other economies are not indebted in the rest of the world. People got too hung up on this. And no, there's debt everywhere. The issue is when you start seeing cost of capital rise. in a place especially that doesn't have the reserve currency status and some other other things that I think that are very positive and end up helping. However, I do think that it's what's happening right now is China is the first large economy having to deal with or having to decide in really adding liquidity support in an economy that already has inflationary forces moving higher. And so what are they going to do? Are they going to really add further fuel to the inflation fire, or are they going to let things reconcile on their own? And I think that most times central banks will take the path of least resistance, which is the inflationary route. And so that's why I believe that China will devalue its currency at some point. I think those macro imbalances, and that's the whole reason. Every 1 to 2 years, China comes back to the news as being the problem. And so it's because the problems have never been resolved. And so I believe that in order to do that, either there has to be a devaluation of the monetary system. And again, this is nothing new. I know a lot of people look at the last 20 years. If you look at the last century, China has restated its monetary system at least about 10 times. And so it's nothing new here. And so I think there is a very high probability that that could be one of the ways to fix the issue. And so we've always had Chinese yuan put options in our portfolio. I view it as an insurance. And if I'm wrong, that's a few bips or a few percentage points of the portfolio that we risk every year. And so we've made up a whole year of performance on that trade. And it could certainly happen here. And so I've been very focused on that as an investment.
Fascinating. Okay, excellent. Well, let's come on to mining then and could you just briefly give the sort of the strategy of your precious metals fund, and then we can ask a little bit more about how you see the health of the precious metals miners, whether that's the majors, and then also down into the juniors.
Yeah, I think it all starts with you have a view about the underlying metal, which is, in my opinion, very bullish, and you start thinking, how do I position for this? So we came in 2018. There was a very large crash in equity markets in the fourth quarter. We thought that we should be buying gold at that period, and we started a fund. We started actually a separate managed account and started buying bigger miners. That's one of the options you can do. So you can break down the whole industry. You can buy royalties. You can buy the large producers who's very consistent for cash flow. Certainly, that's what we did. And then you can dive into the developers. The developers carry higher risk, but also you can sort of understand from a financial standpoint how those businesses will become profitable, how much it's going to cost them to develop those mines. There's certainly a risk of those things delaying longer and having other issues regarding production. And so there's quite a lot of financial savvy folks that try to navigate the developing or developer side of the industry. In our view, as we see this depletion of reserves from the majors, where we've had not only a difficulty of finding new gold reserves worldwide, we also seen a depletion of those reserves from the majors without replenishing them. And so there is certainly an issue where a gold supply cliff is beginning to happen. And the majors are going to be looking for new exploration projects so they then take it to production later on. We've had a very, I would say, very safe and conservative corporate behavior coming from most of the executives in those businesses. And that's coming from just a market that has been in a downward trend since 2011 and recently has started to tick higher. And so I think that has certainly really impacted the way shareholders look up to their management teams and how they demand that every dollar has to be producing dollars too, and not only carrying assets. Now, when you study history in terms of what works during secular bull markets, and when you identify that you're at the early stages of a bull market for gold or silver, and you're at that cycle, number one, the silver performs better than gold. So you see the gold ratio fall significantly during those periods. You see miners leading the way, but the miners that are smaller tend to lead even a stronger manner, especially the ones that have gold and silver in the ground, not the ones necessarily that are already producing, but the ones that have the gold and silver in the ground and still have to develop those mines. Those are just discoveries. They're not in the developing phase. And so what we did was we partnered with Quinton Henney, which is a guy who has been extremely successful in this industry. I think there's no need for introduction for him. He's just an incredibly smart geologist. And we said, look, we agree with you from a macro perspective. How about we finance, a very large amount of diversified deals in very focused geographic regions that you think will be the next world-class discoveries? And let's just finance all of those and become large investors. So we come in at about 0 to 20% stake in most of those businesses at a 10 million to 20 million valuation usually, and then we want to help them to succeed over time. So we infuse capital, we help them to market those companies as well, but also we help them not only adjusting their teams if necessary. It's a real friendly approach where we make sure that the company is open-minded, first of all, to work with Crescat. If there's no openness to an involvement between Crescat and those firms, we don't get involved. There's a lot of ego in this industry. So it's important to find the right asset with the right management team. And so we have over 90 deals in our portfolio. Some of those are core positions that are very activist, that we're dealing with them on a daily basis. And that has been the case. We've had a lot of success recently. Our funds were up over 200% since we launched in a market that has been going lower, not higher for gold prices. And so we think that with the macro change moving forward, becoming a tailwind for precious metals prices and an M&A cycle that is yet to come, I think all those parts of liquidities channels will really push the price of exploration projects significantly multiples higher than what they are today.
Fantastic. Yeah, it's a very interesting, exciting time for the junior tier, given how bearish the past decade was in terms of raising capital from funds like yourselves. I just wanted to pick on your point around the reserve replacement challenge and this strange position whereby the majors are certainly delivering cash, good capital discipline, as you described, performing well, the health seems well, yet the valuations and then the generalist interest might not seem to reflect how well these companies are performing and how much cash they're generating. And that points to the growth challenge. Do you now see the strategy for majors to acquire growth again and do another round of M&A that we said, because they seem to have already done quite a bit sort of pre-pandemic in the last few years? And then also our exploration budget is going to come back. Is everyone going to be sort of chucking money back into growth? And are shareholders going to be happy with that?
I don't know if I agree with that's coming back. I think what we may see is a consolidation in exploration space itself first, right. Where businesses that are smaller that make sense to be together and should be merged. And I think we're going to see some of that from the majors' perspective. I guess I think there is a higher probability of them making decisions in order to attract larger capital, such as dividends, paying dividends and things like that. I don't think that we're in a phase where they're going to be throwing money in exploration, in an exploration budget to really be looking for gold and silver with their own money. I think that's usually not, no, we usually see that more in later parts of the cycle. I think that the beginning of this is first of all, there's a real lack of effort from those larger firms to really be doing their own homework into and buying those businesses or actually acquiring assets to actually look for those. I think that that change of allowing shareholders allowing basically those firms to spend the money in the ground, it's gonna take some time to to work it out. So I don't believe necessarily that that's going to be so quickly. I think it's going to happen within the industry first, where a lot of those firms are going to merge. We won some of the firms that we are involved to merge because we think it makes sense. We want to be consolidators in regions that we think that will become, as I said, world-class projects in the future. And there are plenty of examples of those. But yeah, I think, you look at the net accumulation of cash in the majors, we've never seen anything like that before. I mean, free cash flow margins have been surging, and sure, there is a cost wave coming. Cost wave is lagging, and it's going to come. It's we've seen this throughout history. In 2011, that cost curve also was delayed. It's coming, and so it's going to squeeze some of their margins too. And so I think that very soon we're going to see some changes in how they use capital. But I don't think necessarily we're going to see very successful money being deployed to look for gold. I think they're going to be, since they're so late in the party, I think they're going to have to look for things that are already been in the process of discovery. And that's, I think that's a big thing.
Excellent, certainly. I just wanted to touch on, how early do you look within projects? You mentioned quickly your strategy, the sort of type of companies that you like, and that you hold a lot of deals within the portfolio. But within these sort of regions that you think are going to become world beating, how greenfield, how early stage can you go? And also, where might those regions be? Is it traditional jurisdictions like Canada, Australia, or are you looking further afield?
Look, I think it's a good question. About 85% of portfolio is in exploration. The rest is mostly on development phase. So that gives you an idea. But as far as inside of the exploration side, some of those stories are even pre-IPO, and some of them are just properties that have not really drilled yet. And so properties that just make sense geologically. They're close to other properties. We know the owners. We think that they have something that is worth putting a few millions to see if there's poking holes and helping them to raise that money. Not necessarily it's all Crescat's money, but we're certainly involved in very, very early stage stories of less than 5 million market cap, and so I think. But the stories we like the most, I think, it really depends. I mean, everything has to be risk adjusted. Now we have a story in Bolivia, El Oro Resources, and a lot of people say, well, Bolivia, well, it's just the largest silver discovery probably in history here. It could potentially be. And so, so that's why we like it. But it's, not every asset in Bolivia looks attractive, and, they're working with the right team. It just makes a lot of sense. It's priced accordingly as well. So that's why we like the asset now and why we got involved. Now we don't get involved with investments in Africa. We have one investment in Africa that also made sense. We don't make any investments in China or Russia. We have a significant amount in Canada, Nevada, here in the US, some places in Arizona. We have some investments in Mexico, depending on the area. We have investments in Brazil, Bolivia, Peru. We also have investments in Finland. We think Finland is going to be a very interesting region in general of a lot of emerging discoveries of gold and silver. Some of them already been discovered, and some others will be new discoveries, and maybe Firefox would be one of them. And then there is also Australia that we're really bullish on. We have a lot of investments in Australia too. So it's a mix of a lot of things, but some of them are more traditional. Some of them are a little bit out of the norm, but certainly we're very aware of the risk, and if it's priced we'll get involved.
Excellent. That's great. Well, Tavi, that's a really good rundown. Appreciate you taking the time to chat with us and give us an insight on where the market's headed and the bullish narrative, and an insight into your fund. So thanks for speaking with Assay TV.
Well, thanks for having me, Adam.